This is Pranav Rao from Smartkarma, and I'm pleased to have with me Osbert Tang to talk through his recent insight comparing SITC and OOIL, that's 1308HK and 316HK. Osbert, thanks for your time today on the 19th of March. Can you briefly introduce the two companies and talk through how your pair recommendation from last year has performed?
Sure, thank you very much for that. Both SITC and OOIL are container shipping companies as well as logistic companies, but there are some kind of significant difference between them in terms of the geographical coverage. SITC is primarily an intra-Asia company, which although they have recently expanded into providing service to cover the Indian subcontinent as well. For OOIL, it is instead mainly a long-haul player, because if you look back in last year, the Trans-Pacific, Asia, Europe, as well as Transatlantic routes roughly account for about 51% of its total volume. So it is more on the long-haul player. At the same time, if you look back in our recommendation, our call for long SITC, short OOIL was introduced in April last year. So far, it has generated a return of more than 50 percentage points. Although both stock has rallied, but SITC has performing much better than OOIL. And even for year to date, you can see that SITC has still outperformed OOIL by roughly about 8 percentage points. So quite a pretty good call.
Yep. Maybe you can kind of talk through why you think this outperformance of SITC versus OOIL continues.
Yeah, there are a couple of reasons that I think will support SITC to continue its outperformance in this year. Firstly, financially, SITC is expected to, for the next 2 years, generate an ROE of around at least 40% possible. Whereas for OOIL, the projection is roughly about 3 to 4% in terms of the ROE, so there is a significant difference between two. If you look at the net margin as well, SITC probably going to be around 30%, but OOIL is only around 5%, so it's another area that SITC is doing better than OOIL. Operationally, we also see that SITC, as I said earlier, this is a pure intra-Asia player, so it will benefit from the booming regional trade. For the first 2 months of this year, China ASEAN export value has actually increased by more than, or actually close to 30%. But OOIL is a different story because its exposure to the Trans-Pacific route, it is suffering from China-US trade tension, which for the first 2 months, China export to US has actually come down by about 11%. Another issue very much on the supply side, because we see supply pressure is actually one challenge for OOIL. OOIL's existing new building order book roughly account for about 37% of its existing fleet size. This is much larger than SITC's roughly about 22%, which is more comfortable for SITC. But it is even still higher than the industry's overall 33%. So to summarize, what you see is that OOIL's supply pressure not just higher than SITC, but also higher than the industry as well.
Got it. There's a lot of happenings in the Middle East these days. How do you think a potential resolution of the conflict in the Persian Gulf might impact this trade idea?
Well, I think this is probably one area that OOIL may benefit more than SITC. As you can see that as we have the Middle East crisis right now, the crude oil price has spiked and also that elevated the overall bunker price. For last year, OOIL roughly has about 15% of its revenue being eaten up by bunker costs. But for SITC, it is only around 9%. So what it means is that OOIL right now is suffering more than SITC because of a higher bunker price bill. If there is a resolution in the Middle East or the Persian Gulf, what we see is that we naturally expect the crude oil price to come down, and at the same time that will help OOIL to reduce its overall fuel bill and help to lower its overall burden. So that would, to a certain extent, help OOIL to a certain extent when compared with SITC. But one thing we have to keep in mind is that it's quite difficult for it to return to the pre-war level because a higher risk premium has already built in the crude oil or the oil market. So in the medium term, OOIL will still exposed to higher fuel bill, higher oil price and bunker price than SITC. So even though there is some short-term ease in the pressure, in the medium term, OOIL is still more exposed. So that's how we see the impact on both companies.
Got it. Thanks for the call today, Osbert. And listeners, check out our coverage of Chinese industrials on Smartkarma and tune into our next Smart Call. Thank you.
Thank you, Pranav.